Hello, 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 everyone. Welcome to tonight's webinar. My name is Jeremy Blossom. I'm with TradeStocks.com, and I am back. Woo, what a hiatus I was just on. I'm so excited that everybody can be joining me tonight. Look at everybody coming in. Grab your favorite beverage tonight, wherever that may be. And whatever that may be. In my case, I'm drinking a delicious Fiji water. And I'm coming to you from my office here at TradeStocks.com, which is located in Laguna Beach, California. If you can hear me loud and clear, let me know where you are joining me tonight in the chat feature. These events are way more fun with interactions, so don't be shy. Say hello. And I'm super excited to jump into all of the craziness that is happening in the markets. I feel like I'm a little bit of a good luck charm, if I'm going to be completely honest with you. So if you've been coming to our charting room on a week-by-week basis, we've taken the last few weeks off. My son broke his leg one night, true story. And there's been a bunch of other things that have been going on. And I'm just now back. And guess what? The markets are up. So you're welcome. I'm going to take full credit for that, although you obviously know I cannot. Let's see here. Great. We've got some people from all over. Thanks for saying hello, everyone. I've got some people from Chicago. Hello from Chicago. Olympia. Oh, here he is.
Oh, what's up, Jay?
And JC Parets. What's up, my friend? Oh, well, you know what? Your day just got a hell of a lot better. Whatever kind of day you had doesn't exist, man.
I had a great day for the record. I'm not saying I had a bad day.
All right.
Killed it today, dude. Are you kidding me? Crushed it. It was just
man,
it was a long one. Like these are from 7 a.m. meetings in India to here we are. It's 8. This is 13 hours later. Just like I was on the Investopedia podcast. I just gave a presentation in Wharton that lasted 90 minutes.
Wow.
I had a call with our institutional clients. We're putting together a quarterly report, so we had a team meeting about that.
Hectic. Well, I'm so happy that you could grace us with your presence after Wharton meeting.
This for me, this is like my day's over. Now I just get to bullshit with you. I just opened a nice Santa Millon. How you doing?
Ooh, look at that. I could smell it from here. That smells delicious.
Now I just get to bullshit with you guys, drink some vino. Everybody leaves me alone.
I'm loving it. I'm loving it. Well, we got people from all over the country coming in and saying hello. We even got Nate Aloha from Hawaii. And we got a couple guys from Chicago, New York, Washington. So JC sounds
lower. How about now?
There we go.
Check 1 2 1 2. All I need is one mic.
I'm actually gonna zoom.
Oh, hold on. I have the wrong settings. Hold on. My bad. Oh no, I have the right settings. I'm good.
You good? Yeah, I can hear you. You sound good. You got a little bass in your voice.
Little bass, man. I have been talking, and for someone who talks a lot, like I have been another level today. Another level.
So JC, I was just saying before you came on that I told everybody that they're welcome, because the last few weeks it's been like a little bit of a thing between me and you. The one week, just a couple days before we're supposed to start, my son breaks his leg. I think the day of, like 2 Thursdays ago, my son breaks his tibia. So thank you for stepping in and helping me out. And then the last 2 weeks, you were traveling 1 week, and I don't know, something happened, and the markets were shit. And now we're doing it this week, and guess what happened to the markets today? And I just take full responsibility, JC, for the run we had, and everybody's just welcome, because it's because we're doing it in the charting room that everybody made money today. Hopefully.
That's right. No doubt about it. I like it.
So for everybody who's joining us, my name is Jeremy Blossom. I am the founder of tradestocks.com. I come from the commodity world. I actually worked for a commodities hedge fund back in 2004 to 2011. Then I owned my own financial advisory firm to 2013 before founding Strike Point Media, which owns a bunch of website properties, is a marketing company. And I met JC along the way in my journey, and no joke, instantly found that JC, you were one of the smartest guys, coolest guys that I ever met. And so JC is the founder of allstarcharts.com. He is the world's most popular, probably most world-renowned at the moment, chartered market technician.
At the moment, because I'm not going to be in the future.
I think
at the moment, he's
you know what I was thinking when I said that at the moment, JC, can I just get real with you for a second? Yeah, I was thinking about the people that have been, there's like chartists who've died, right? Like you got these legends who are no longer here. So rest in peace. And so my brain just for some reason got hung up on that there's like dead people that are probably super popular and could be arguably more popular than you. But that's why I said now, because I didn't want to say, anyway, I got tripped up because I didn't want to get dark with where I was going with that in my head. And
you're smooth, like you're professional. I mean, you were on MTV, like this is like your thing, right? The folks know that we are in right. We have a celebrity among us, an MTV reality star.
I don't, my team and family love to embarrass me with that fact, but,
so do I.
And so do you. Yeah. Well, that's why you're friends and family. So, right. If there's a camera, I've got I don't need a light. It's plenty of light in here, but you know what I do, JC? I put a light on because it makes me feel like I'm extra in.
You got that tan to show off, you got that tan, that Hawaiian, thing going,
That's right. And I've also got some of the gray hairs glistening too. I got to show people that I wasn't born yesterday, even though I like my hair high and tight. We're not here to talk about hair. We're not here to talk about wine. We're here to talk about making money in the markets. And I was just doing my intro of you, JC, but why don't you do it yourself? Introduce yourself to everybody tonight. There could be some new people who have never heard of you.
Well, my name is JC Parets, and I am incredibly fortunate that I spent over a decade in New York City, living there after college, and really had dinner, with billionaires, fund managers. I got to see, pretty much anybody in this business. For one reason or another, you got to make your way to New York. Maybe not every year, but you're going to get there for one reason or another, whether it's just for fun or for business. So it was either, hey, JC, I'm coming into town, get the crew together, let's go get dinner, drinks, whatever. Or it was, hey, JC, so-and-so's in town, we're all going to get dinner, we're all going to get drinks, come through. So one way or another, I got to learn from a large portion of the best that ever did it, the best that are currently doing it. And, really the things that I do, whether it's the charting school, the educational stuff that we do, the research that we're doing, there's very little that we made up or that I made up. It's really a collection of the things that I learned from those who came before me. And a lot of credit goes out to my current, contemporaries. My colleagues are the best in the business. Like when I tell you that I probably look at more charts than anyone in the world, if there is anybody who looks at more or who even comes close to us, they're probably good friends of mine, and I can name them to you right now.
It's true. He does look at a lot of charts. One of these days, we should have Morgan on here, and she could tell us what it's like to be married to someone who looks at so many charts.
Oh my God! When things get better, I promised the crew we're gonna go to Greece. The whole team's going to Greece, and we're bringing the ladies with us. So. So that while we're doing some work, they can hang out by the beach and complain about us. So that's the plan. You're welcome to come too, Jay.
Thank you. I was just gonna say, I will be. I'll see you guys there. That sounds like a great time.
We're going to Naxos. That's the plan. We're going straight to Naxos.
I'm down and down, dude. Let's make that happen. In the meantime, let's help make other people some money so they could possibly join us there too if they would like. So, all right, more the merrier. And that's the really big thing that we wanted to talk to everybody tonight is it's the trading, okay? The markets are providing a tremendous opportunity every single day. And how you take advantage of that opportunity is being right. And there are two sound principles that people are using on a day-to-day basis. You're either in the fundamental camp or you're in the technical analysis camp. And we are in the technical analysis camp because we believe that we believe what, JC? Why are we in the technical analysis camp?
Because we'd be fools not to, is really what it comes down to. Because we analyze the behavior of the market and its participants, as opposed to the goods and the services that a particular market deals with. So fundamental analysts spend all their days trying to figure out why, and we spend all our days ignoring why, because we really couldn't care less, So that's the beauty of it. The only thing we trust is price. It's the only fact out there. Earnings are estimates. They're going to get restated. We know that. Unemployment data and GDP and all that stuff, all these government reports, those are estimates. They're going to get revised a whole bunch of times. We know that going in. A CEO can be wrong or lying to you. Both happen quite often. We know that's out the window. What about sell-side analysts? You're going to listen to the sell-side Wall Street research? I mean, come on, right? So there's conflicts of interest across the board. The media is obviously not there to help you. They're there to distract you. That's their job, to be a distraction to the things that you should be doing. And the bigger distraction they are, the more they get paid. So we know they're not on our side. So the only thing we can actually trust, the only thing that will never be restated is price. Price is fact. Price is truth. And what else do we know? We know that markets returns do not fall in a normal distribution curve, right? We know that. The markets are I shouldn't say they're very inefficient. They are almost efficient, therefore making them inefficient by definition. And there are plenty of inefficiencies there to find. Markets trend, right? So whether you are a fundamental analyst, you're an economist, you look at the moons and the stars and the planets to make your investment decisions, you can't tell me that markets don't trend, right? You look at charts going back 100 years, you can look at charts from today. It goes up for a while, goes down for a while, goes sideways for a while. Whatever it's happening, there's a higher likelihood for that to continue in that trend than for the trend to completely reverse. So what do we do as technicians? We identify the direction of the primary trend. What do fundamental analysts do? They ignore the primary trend. Fundamental analysts always think the market is wrong and they're right. As technicians, we always know that the market is right, and therefore we focus on that. That's the difference. I think we're cooler, Tim.
That you just took up. That's the only thing I was going to add was, and we're cooler too. No doubt about it. I like to say when you from now on, every time you say I look at more charts than anybody else, I also I kind of kin that to data. You really process more data, and we're talking about what data you find important versus what fundamental analysis find important. And we believe that as
no wonder they're so confused.
Yeah. That we believe that we can do it. And so not only that, there's another layer to all this. So there's what data are you choosing to look at? Then there is, so it looks like someone is still having some audio issues. Charlie, is it me that's having, or is it?
Because I presume audio issues are on my end. If you guys can hear me, I mean, I'm on this thing all the time,
I can
all
hear
day.
You just fine, can you guys? We just want to make sure everyone's good. Can everyone let us know? Anybody else have any audio issues?
Yeah. Do I? My voice might be a little hoarse. You know how I get all riled up when we start talking about charts, Jeremy. I get all excited.
Yeah.
When I do the TV, when I'm on TV, I'm at the Nasdaq, and like right before I come on, right, I'm in like the little studio, and they're like, "All right, JC, count to 10." I'm like 1, 2, 3, and they set their audio, and then I start talking on live TV, and I'm like, "All right, now we're gonna." The audio's all out of whack.
Maybe Charles is just brand new. No, JC just sounds like this, guys. So.
This is how I roll.
So there's two layers to all of this, okay? So there's what data are we deciding to look at and claim as fact, because facts are how you should be making your investments. You should not be making them off of opinion. You shouldn't be making them off of just your gut or whatever the news says. You should try to make it and base it off as much factual information. Here's one fact no one has. This is the level playing field for everyone in the world. No one has the facts about tomorrow. What's going to happen tomorrow? We don't. So we're going to use the facts of today to help us determine what the most likely outcome is going to be tomorrow. And that's the second thing that JC does. After we've been able to go and look and say, what data am I going to pay attention to? And this guy looks at a lot of data. He then disseminates that data to try to find asymmetric risk to reward trades. It's a big word. Here's a simple definition of that. I want to risk as least as possible from a risk perspective. JC, is risk and dollar amount the same thing? Not necessarily. Risking $1 million, okay, could have actually a very little amount of risk on $1 million. You could take $10,000 and it could be really, really risky. The dollar amount is not necessarily indicative of the amount of risk that's associated with it. We are talking about the potential of losing such said amount of money, the least likely possibility of losing that amount of money with, guess what? Asymmetric risk, meaning the best returns possible. The absolute best returns possible with the appropriate least amount of risk that we can do. JC is so good at that, ladies and gentlemen. He is hired by the biggest institutions in the world for that information. He's on this show for that information. He's been going for 13 hours straight today because he's so good at that, at doing that on a day-to-day basis. And without any further ado, we're going to be going over charts today and opportunities today that he sees with that criteria. The 1-2 punch. His left hand is technical analysis. His right hand is the ability to discern that data into asymmetric risk-reward trades.
That's pretty good, Jeremy. You've been practicing that, huh?
Yeah, all day today, man. All day today. I've been going up to everybody. I've been making phone calls to my dad. Hey, Dad, how's the sound? He's like, slow it down a little bit.
So, all right, Jeremy, what do you want to talk about? We could talk about so many things. We could talk about monthly charts. We can look at the under the hood. We could look at our 2 to 100 club. We could take questions. I could just go on rants about behavioral finance and emotions and fear and greed. We could talk about Charlie Dow, the journalist in Springfield, Massachusetts, where the businesses would say, "Our business is none of your business, Charlie."
All right. We're going to here's what I would love to do this exercise if you don't mind. So another caveat, I'm really oversimplifying the beauty and magic behind what you're able to do, JC, and I'm not trying to make light of it by any means, folks. He's really, really good at this. JC, you do a top-down approach. So you look at things from like a really, really big 30,000 foot view, and then you get narrow and narrow and narrow. What I'd like to do, if you don't mind, is just do a condensed version of that. So maybe we can start off with like the round robin, like look at this, the major U.S. equity markets. Like, do you see anything in the bond markets? Do you see anything in the commodity markets? Like, what are the things, if anything, are set anomalies? Where we left off 2 weeks ago, we've been doing this every week. So where we left off 2 weeks ago was, hey, the markets are coming back. People think that, this is the time, get out, bail. True story. I got a text message from my friend. I'm 97% in cash now. Swear, text 95%. Dave, if you're here, hello. Told him to come. I was like, dude, what are you doing? So he's like, I got to go all cash. Okay, whatever. Hey, that's you do you. And then of course, what happens? The market has been, it's trying to trend down and now it's coming back. So I'd love to just kind of get caught up on, you have been saying, nope, we're not over yet. Nope, we're still going up. Nope, I think that there's still good opportunities out there. So kind of fill us in on if that's still what you think, and then more specifically start to dive in. And you could pick, from there, if you want to get into the under the hood stuff, or if you want to go to 2 to 100, maybe,
Yeah. Let's take that step back. And I think it's important to understand what's in the market, what drives the market. And when you talk about the S&P 500 and the Nasdaq, we had a little bit of a correction in September at the index level. And the index is driven, these are market cap weighted indexes. These indexes are driven by the largest names. So when you have rotation out of these monsters, the indexes are going to get hit. Meanwhile, you have stocks like materials, industrials, mid-cap stock, small-cap discretionaries. These stocks could double or triple, and they're not going to even put a dent on the S&P 500. So if you're so busy and so preoccupied with what did the Dow do today, what did the S&P 500 do, what did Apple do, what did Amazon do, you're going to be so busy with that, you're going to miss the giant elephant walking in front of you, the D-Dog, the Peloton, the Snapchat, Zoom, the names that they're not huge components in the S&P. some of these aren't even in the, Tesla's not even in the S&P 500, for example, you're missing out on monster moves. And that's the environment we're in. When you look at the major indexes, and we can look at a few, transports, you know, are messy, gone sideways for a while. Small caps, messy, gone sideways for a while. Same thing with mid caps. A lot of messy charts. Germany's a mess. European banks are a mess. Like just, and when I say mess, I mean like sideways messy, right? So what do we do in that environment? There's option strategies you could take advantage of, for sure, to take advantage of that. But with certain catalysts coming up with elections, do you really want to be short volatility? I don't. I had that conversation with Sean, one of the many conversations I had today about the market. And Sean's like, I'm like, Sean, like, what do you think? Like, this is a range-bound market. It's probably going to be like this for a while. Like, you want to sell, you know, sell the wings. Like, what do you want to do? And he's like, dude, this is not the time to be doing that going into, you know, we can have explosive volatility, and that's just not something that I want to be short. So he's like, you know, take advantage of the elevated volatility to, you know, put on, you know, buy call spreads, sell put spreads, you know, really put yourself in a position to take advantage of higher prices without necessarily giving you that short volatility exposure. So that was interesting, where he put a whole squadouche on my idea to sell volatility. He's like, no, Jay, we can't do that. I'm like, okay, fair. That's why I keep you around. You know, I'm not a volatility expert. He is. So for me, I can analyze the behavior of the markets and set up stock ideas and things like that. But then he brings that third element of volatility that he's the expert. I am not. So that's a great guy to have around for sure, to keep me in check and not do stupid things like be short volatility going into an election. That was fair. I was like, yeah, that's probably pretty stupid. Right? You know, right? You got to know what you're good at, and you have to know what you're not good at. So the common denominator in this whole sector rotation and the rotation into smaller weightings in the index, to me, just reiterates that we should focus on stocks and individual setups more so, much more so than the indexes. I feel like always pay more attention to the stocks themselves than the indexes, but now more so than ever. And I have a very, you know, let's just get it. Let's just get it. So I'm going to show you a chart, a bubble chart that I think really tells the story really well. But the point that I wanted to make is that Jeremy wanted me to talk about the top-down approach. So what we're going to do is we're going to look at all of the indexes in the world. So before we even get into the Dow and the S&P, if there's a country, if there's a stock market in that country, we're going to look at their index. And if there isn't an index, we'll probably build one, right? And then we're going to look at every commodity current future in the world, not just oil and gold and natural gas and silver, but cardamom futures in India and palm oil futures in Malaysia. You know, we're looking across the board. We're probably looking at the top 60 currency crosses, everything from euro, yen, dollar to Nakisaki and everything in between. And then we're looking at the interest rate markets across the curve, including the credit spreads in about 30, 40 countries, developed and emerging. We do all of that and then analyze all of the intermarket relationships between all of them so that we have all of this context. So by the time we get into the United States, all of that fits within that context. So then we'll dive into the indexes, Dow, S&P, New York Stock Exchange Composite, Nasdaq, Value Line, et cetera, et cetera. But not just that, but then the sectors, energy, financials, industrials, healthcare, et cetera. Not just the sectors, but the sub-industry groups within those sectors. So within healthcare, you've got pharma, biotech, managed health, medical equipment. These are vastly different. In energy, you've got the refiners, oil services, producers, explorers and producers, integrateds. So you within the sector, you have sub-industry groups within that, right? In technology, you've got software, semiconductors, cloud computing, internet, right? Sub-industry groups. And then finally, we look at the components of those industries so that by the time we decide we're going to buy Microsoft, 95% of the reason we're buying Microsoft has nothing to do with the chart of Microsoft. It has to do with those other 5,000 charts that we looked at. So then in order to supplement all of that top-down work, we have these bottoms-up universes, like the 2 to 100 club, like the under the hood, that gives us a universe of stocks for a variety of reasons, makes that universe. So then we have a bottoms-up list that we can then analyze, which at the end of the day winds up making it very, very difficult for us to miss anything. Okay?
Yeah,
right.
Great explanation.
I've said it like 6 times today. So how am I doing?
Yeah, that was really good. You know what? Like that kind of gave me like a nice, as you were explaining that. It sounds like a lot, and it sounds like, wow, how are you sure? Do you really do that? But you know what? I was thinking, like, it's very much like anything, right? Let's say that you're going to go on a trip, your daughter's less than 1 year old. You're going to go on a trip somewhere. And what are you going to do? You're going to look at the weather. You're going to look at like the hotel. You have all these criteria. You have like these things, subconscious things that like, all right, I have a budget. You don't have to express these things. They become second nature to you. And you can rule out, go to hotels.com. You can look at Expedia, the flights, and you can rule out 90% of that stuff by like all the things you know about who you are, right?
Yeah.
And then like as different things pop up, like, oh,
These
wait.
days they know it already about you.
Yeah, now they know it all. But guess what? It all comes down, exactly. They know it all because it all comes down to that data. And so, but the beautiful thing is that these markets are all dynamic. The palm oil futures are dynamic, and the currency exchanges are dynamic. And so they are changing, which means we have to keep a pulse on them and why they're changing. Why are the hotel? Oh, there's a huge convention that same weekend. We wanted to go and visit your mother, right, in that same city. So all the hotels are going to be sold out. Like, got it. Like that helps. Okay, I should switch over to Airbnb, or I'm going to stay with my mom, and you can pivot. And that's the kind of stuff that we're talking. I know it sounds, like I said, but it's really just taking that from a data approach and applying it, and then you can really get down into the things that you really care about, and that's how you're so good at coming up with these asymmetric risk reward trades.
And it's funny you mentioned trip. I'm actually leaving tomorrow to the Berkshires. I know John mentioned that he's from Springfield, Mass, is right by you. Any recommendations in the Berkshires? I'll be there with my wife and a 2-month-old. So, maybe not a list of dive bars, maybe more.
And then, yes, dive bars, just kid-friendly dive bars.
Oh, yeah. They got those there. Yeah. COVID-friendly, kid-friendly. All right, Jay, I got a bubble chart for you, baby. You know how I do.
Mm-hmm.
You like this one?
You know exactly what to show me, man.
So what are we looking at here? We are looking at, on the x-axis, we are looking at the return off the March lows. So the further to the right it is, the better it's done since March, right? On the y-axis, we're looking at how it's done in the third quarter. So the higher up it is, the better it did in the third quarter. The further to the right, the better it's done since spring. And these are the S&P sectors on both a cap-weighted, equally weighted, small caps and mid caps. So for every sector, you've got all 4 of those. So for financials, you've got cap-weighted financials, small cap financials, mid cap financials, and equally weighted financials. For consumer discretionary, which you'll notice are all in the upper right, meaning the best performers since March and the best performers in the third quarter are all discretionary. Equally weighted discretionary, cap-weighted discretionary, small cap discretionary is up 116% off the March lows, FYI. Wow. And mid-cap discretionary is up 124%. So when you have these no-talent ass clowns telling you that Amazon is discretionary, that couldn't be more wrong. Amazon is discretionary in only the worst performing discretionary. Hello, right? So what does that say? Discretionary is obviously a place that we should be paying attention to because that's what's showing relative strength. Okay, what's showing the next amount of relative strength? Materials, industrials, on an equally weighted basis. On a cap weighted basis, obviously large cap tech is here too. And then what's down to the lower left? The worst performers off the March lows and the worst performers in the third quarter are financials, real estate, small cap financials, small cap real estate. These are the worst areas. So I think we focus on what's going on up here. That has our attention. What do you think about that for a bubble chart?
I love it. That's great. It's almost unfair, to be honest with you. It's like almost unfair that you can, you know what I mean? For everybody who's watching right here, I mean, tell me if anybody here has made a chart like that. Has anybody made themselves a chart like that? I would love it. I mean, I don't think so.
Visual. Isn't it a great
it's
visual?
An amazing visual. But again, it comes down to data, right? the best athletes in the world. I'm so rooting for LeBron, bro, to win another champion. Sorry, everybody's may be hating on LeBron, but obviously I'm a Lakers fan, and I'm from Cleveland. So I'm a double Laker LeBron fan. And you know what happened? Kobe this year, God rest his soul. Like, this is like a cool story. But I see him on the floor, LeBron on the floor, and the IQ that the guy has. And if you notice, it's what he can see the other players and what he's paying attention to, which makes the plays happen. He understands the defender that is on one of his players and his teammates, and he can make those adjustments and moves. If you are like LeBron on the floor, when you can see you're paying attention to the right stuff, right? You're not paying attention to the defender that's better than your teammate, who's going to have no chance, is going to be struggling all game long to take anything. That's not what you're paying attention to, because most likely he's going to be outboxed, and he's going to be, he's not going to get a shot off. They're going to double team him. They're going to be looking for the outliers, the ones where there is the biggest discrepancy between his player and the one defending him. He's probably going to have the most opportunities for looks. And do you know how to do that as an investor? Do you know how to go and find where there's going to be the biggest discrepancies and where you're going to have the most looks? Because if not, that's probably why you're always mediocre in your performance. And I know that you're mediocre in your performance because you're here tonight. Because if you were amazing at your performance, you wouldn't be here. You'd be off on a boat somewhere doing whatever.
Greece. You'd already be in Greece before.
You're being in Greece. What's amazing about you, there's thousands of people that need to be here tonight. What I love about everyone here, including myself, is that I'm always trying to get better. I don't know what I don't see what you see, JC. That's why you're here. That's why I'm learning from you. And so I'm trying to go and hear your expertise and guidance so that I know where I'm supposed to be looking. I can cut through the bullshit, and I can pay attention to the things that matter. So that's my way of saying, that's my way of saying that you and what you're doing and what you just described to me is really special.
Well, I appreciate that. I think we're all striving to be better, no matter how good you are. I mean, the hotter you are, the better you're doing, the closer you are to that trade that could be about to kill you. And one day could just change everything. So the goal here is to just stay humble, stay open-minded, focus on the data, not the noise that surrounds, the whole gossip that, surrounds the market about the election and the Trump and the Fed and Spanish debt. And I mean, whatever your conspiracy theory is, at the end of the day is irrelevant. Price is really the only thing that pays. So that's really what we focus on. And I got a chart here, Jeremy, if you can believe that, I got two charts for you. I got a lot more than two charts, but I'm going to talk about two charts right now. And I got about 2,000 charts for you. We can do this till tomorrow. This is a chart of the Nasdaq 100 relative to the United States Treasury bonds. So this is the stocks versus bonds here in the United States. And I don't care what your conspiracy theory is. For you gloom and doomers out there, this is the chart that I would show you. Like, if you think the stock market's coming to an end because of some virus or some president or some Fed or some whatever it is your theory is, that theory is incorrect and very wrong if this ratio is above the 2018 and 2020 highs. We're above that. This is a multi-year base breakout and successful retest in stocks relative to bonds, suggesting that we need to be very much aggressively buying U.S. equities, not selling them like the conspiracy theorists would encourage us to subscribe to their gloom and doom newsletter or whatever pivot crypto nonsense they're coming up with now, right? This is an environment that we need to very much be aggressively buying stocks if we are above these former highs, which we are. I feel very confident that that is the best thing we do. And then I got to tell you about the Schnauzer pattern.
I saw this, man. I saw this. I was going to ask to see it tonight. Have it in my notes right here, bro. I wanted to see the Schnauzer.
The old Schnauzer formation. So I'm on the phone the other day with about 15 billion in assets under management.
Oh, right? No big deal.
So these two guys, they're buddy portfolio managers. One's a PM. He's got about 10 billion, something like that. And the other guy trades for one of the market wizards. And they are both clients of mine, long time clients of mine forever. I think one referred the other. They brag about which one's known me longer, you know, that whole thing. So anyway, so we're going through charts kind of similar to this. They're picking my brain. JC, what do you think about this? What do you think about that? You know, they're trying to show off the best charts that they think are the coolest charts that I would find interesting. You know, we're doing that whole thing. So then they keep talking about this Schnauzer formation. I'm like, dude, what are you talking about? This Schnauzer? And he's like, look at the Nasdaq 100. And he was pointing out like the Schnauzer formation in a lot of different charts, not just this one, but this was to me the most obvious. Doesn't the chart of the Nasdaq 100 look like a Schnauzer?
Yeah, it totally does.
It does,
yeah.
Right?
Yeah, it does. Yeah.
So anyway, I just thought that was funny. And like people were like, oh, JC, this is serious business. This market thing, serious business. No time to fool around. I'm like, dude, this motherfucker's got 10 billion in assets. And he's telling me about the Schnauzer formation. I'm pretty sure we can have a good time every now and then. It's cool. You know what I'm saying? This guy with his Piker portfolio is telling me to take things more seriously. People take themselves too seriously. Have some fun. If you're not having fun, like, what are you doing? You know what I'm saying?
Yeah,
Schnauzer formation.
It's passion, baby, passion, right? So I agree. And that looks exactly like it. Great. So it is October 1st, 2020. And I just want to reiterate what you said 2 charts ago now, that if it is above, it is a time to what? Own stocks.
Aggressively.
So, aggressively own stocks. It's October 1st, 2020. Let the record show. It is recording. I'm going to play this on YouTube and Facebook in 3 months and say we should be aggressively owning stocks October 1st, 2020.
Very aggressively.
Very aggressively.
Yes. Let's talk relative strength, won't we? Let's talk a little relative strength. So this is an interesting chart. So here, we're looking at the emerging markets index relative to the S&P 500. So this is emerging markets relative to SPYs. So a lot of China here, Latin America, right? This index, the inception was in April of 2003. Immediately after inception, emerging markets absolutely ripped on a relative basis for the next 7 years or so, right? And then since 2010, it's been just the most ridiculous decade of underperformance. I mean, just lower lows, lower highs. I mean, if you haven't been in America because you've been in EM, you have lost hard, right? As you can see here. But if there was ever going to be a time for emerging markets to outperform, this would be a perfectly logical place for it to do so. Exactly where it started to do that 17 years ago, right? Meanwhile, people were talking about a correction in the stock market. The S&P and the Nasdaq had a little bit of a correction in September. Meanwhile, so this is a snapshot of what happened in September. S&P's corrected. Frontier markets went sideways. And if I'm not mistaken, still haven't made new highs, but are pretty much right there, ready to make new highs. Let's reiterate, what are frontier markets? These are markets that are so small and so risky that they're not able to be classified as emerging yet. This is like riskier and scarier than emerging.
Yeah, hence the name Frontier, right? Like back in the old days, you'd go out onto the frontier and like that was the wild, wild west. I mean, there was no law out there. It was, uninhabited. Like, who knows? The world could have ended. Yeah.
Let's talk about the countries that make up this index. You ready?
Mm-hmm.
Kuwait. Kazakhstan.
Oh, wow.
Nigeria. Qatar. These aren't exactly safe havens.
No.
These are not places where Transylvania, the Bank of Transylvania. I'm not even making this up. This is real. The National Bank of Kuwait. These are the stocks that money is flowing into at a faster rate than the United States stock market tech-heavy S&P 500. If the world is in fact coming to an end, is money going to be flowing into these frontier markets like the Bank of Kazakhstan?
I don't think so. That doesn't sound very logical to me.
I'm going to go with no. If frontier markets are outperforming the S&P 500, I would argue that that is more evidence of risk appetite for equities than it is risk aversion. See or no?
See. Good freaking point. Again, I mean, where your brain goes to draw those comparisons.
You're not looking at the Bank of Kazakhstan, bro?
I'm not. No, or the Bank of Transylvania or the Bank of Kuwait, wherever else. I mean, like, no, man, it's unbelievable. But it absolutely makes perfect sense. What do you do when you've had 3 massive bonus checks in a row? Right? I mean, quarter after quarter, you paid down, you bought your car off, you paid off your loan of your car, you paid off all your credit card debt, you put the pool with your third, your second one, put a big pool in the backyard. That third one, yeah, you're thinking, you know what? You know what? I've always wanted that golf simulator. I always wanted that, whatever. You start to like get a little bit more frisky with your ideas, because why? Well, because you expect there to be a 4th bonus check coming. If you had 3 bonus checks in a row and you're like, well, babe, that was it. The gravy train's over. Are you looking at golf simulators or your 3rd car or your 5th car? Are you looking at like that bag your wife always wanted? No. Now you're like, okay, I need to conserve. How long is this going to last me? Where can I go get my next like pop from? Big bone. Am I going to stay in this industry or career? That's the other way to look at that, is when you think and expect there to be more of more, then you start to want to spread, diversify, and take on more risk. And when you think that when you're not going to make as much money, you're not going to get that raise, you're not going to get that bonus, your business that you're working for or the business that you own could be out of business. You're doing the last thing on earth. You're not putting your money in Transylvania. That's for sure.
The Bank of Transylvania. Money's flowing in there, man. I don't know what these guys are doing. Money, they're buying it. So
I think we should go and check out these frontier businesses.
Check it out. Most of them you can't trade. And it's not like we're buying frontier markets. That's what we're doing. It's a source of information, right? And then here's another source of information. This is the equally weighted retailers index, pushing up against all-time highs after doing nothing for 5 years. This is equally weighted retail. Is the world coming to an end and equally weighted retail is breaking out of a 5-year base to all-time highs?
Definitely doesn't seem like that.
No, that's not. That doesn't make any sense at all.
No, it doesn't.
What about home construction? Remember that bubble that popped in 2006, 2007 when everyone was like, oh, yeah, God only made so much land. You can't go wrong with real estate. Remember when the National Realtors Association finally convinced all these clowns that was true, right? Kudos to them. Right. Good marketing, right? Good marketing. The American dream, more like the American nightmare, right? So anyway, fast forward 14 years, and here we are, and the home construction index has finally broken out. Maybe the American nightmare is perhaps turning into more of a dream. Took long enough. It was only 13 years. The beauty of it is the geniuses at iShares and Standard & Poor's created the home builders indexes literally the month before the bubble burst. Like classic. Like literally, this is the launch. This is the launch of the ITB, and the XHB, which is the Standard & Poor's version, launched like a month later, something absurd. Like, man, by the time these ETF people come up with their ETFs, like it's probably too late.
Yeah, exactly.
So finally, they all thought it was such a good idea to create this index. It immediately started to crash. I think they both lost like 80% immediately after launch. And it's taken 13 years just to get back to where they started, right? And now we're breaking out. Now it took 13 years, a long time. Feels like just yesterday. Man, time flies. But man, probably because I didn't own any of these real construction companies this whole time. Probably if you'd been long, you'd be like, man, I've owned these things forever.
I know. I was just thinking that. I was just thinking like how sad it is that investors, don't know about you, because had they known about you, they would be sparing themselves from all the heartache of watching their portfolio just get beaten and beaten and beaten. And there's a point where they're like, well, I ain't selling this for nothing. You know,
the trade turns into an investment. You buy something because of a MACD crossover. Next thing you know, you're listening to conference calls.
Yeah, I'm all in. And so, yeah, man. And it's like, well, man, your money could have been doing so much more for you.
Right.
And you could have had so much less heartache.
Right. So for me, I look at this is consumer discretionary all day, baby. Remember, we were just looking at that bubble chart that you liked so much. This is both of these are industry groups within the consumer discretionary space. So now I think that we should turn our attention to some bottoms up work. What do you think?
I think so.
Bottoms up?
Let's do it. Bottoms up. And Keith is looking for, sorry, not Keith. Mike is definitely looking for some more specifics. I'm letting Mike know right now. By the way, we love interaction and engagement. So Mike, to answer your question, absolutely. He wants to go into Roku and he wants to go into DKING.
Both interaction and engagement.
Yes. And then, yes, we do. And Abbott Labs, Thomas. So yes, we will. But we're going through this kind of top-down approach. I asked JC to do this, so we will get into some specifics here in a second. Keep going. Just want to thanks for that. Appreciate it.
Yep. Check out this is the under the hood. So this is a list of stocks that have shown an increase in investor interest, an unusual increase. Look at some of these names: Snap, Datadog, Zoom, DocuSign. A lot of these names are coming up on our other scans as well, which is very interesting. Sunrun, Pinterest, these are all all-star charts names. You guys who have been following along, Mali, PayPal, Workhorse, Rollins, like these are names. Nikola was a short of ours, but I mean, these are just names that if you've been following along, you've been participating, and it's worked out pretty well. Let's look at Pinterest. This has been one of our, one of the names that has shown up on both our under the hood radar and our 2 to 100. Pinterest, the market capitalization right now is up to 26 billion. So this is our sweet spot. I like this long. This is a massive base breakout, both on an absolute and relative basis. If we're above 37 bucks, I like Pinterest long with a target up near 53. This is, by the way, it's Jeremy. This is the under the hood that came out last week. So some of these names are already taken off a little bit. Pinterest had a monster day today, up over 7%. So for a lot of the trade stocks guys and the all-star charts guys that receive our under the hood report, they're smiling. They're smiling ear to ear, baby.
Yeah, it's unbelievable. And I'm going to drop it just because you went there. I'm going to make sure that everybody sees this. So everybody, we're going to be talking about this in just a minute, but I'm going to make it a little bit earlier. There's the link right there where he's talking about under the hood. If this is the very first time you're ever being introduced to JC and you want to take advantage of this trade and get this trade in your inbox, like he's just showing right now, up 7% today. There's the link for it. He's got, and that's the annual price. It's the annual price. Everybody who's here has probably seen a lot of this stuff, and they're used to the zero ended onto the end of that. Okay, it's only $79. It's like less than $10 a month. So this is a no-brainer. JC purposely built this product and service for everyone who's brand new to him. And he's like, look, I'm going to show you so much value. It's not even funny. That if you love this, you'll love everything else I do. So give it a whirl. It's $79, less than a pair of shoes these days. And it could be making you a lot of money. So continue. That's the link.
So we're being asked about DraftKings. This was on our Under the Hood report 3 weeks ago. This is from September the 11th. And look at the price of the stock at $41. We're being asked about DraftKings. DKNG up another 5% today, up to almost $62. So the stock's up 50% in 3 weeks since we put it out in our Under the Hood report. And it just goes to show you, it's not like brain surgery. It's not like rocket science. I mean, the way we filter and find the names, like maybe it's a little bit more complicated, but fine. We give that to you, right? Because we'll give you the whole list, right? Where's the whole list? We just showed you the whole list, right? We'll give you
Yeah.
the whole list, right? But then what we're going to do is that we're going to get on top of that and we're going to overlay our own technical analysis, because just because there's an unusual increase in investor interest doesn't mean we just buy it blindly, right? It just draws our attention to this particular universe, right?
Yeah, it allows us to focus in on something and then apply your ability to analyze data to come up with asymmetric risk reward trades. And I would argue that a 50% increase in price in 3 weeks would be classified technically as an asymmetric risk reward trade. I would definitely argue that would.
I mean, that was just an absolute, just a monster of a trade. But at the end of the day, what is it? It's just a big base within an ongoing uptrend with relative strength making new highs. So the fact that it broke out and is like hitting our target probably sooner than we even thought, like, that shouldn't be that surprising. Like, that's what it probably should do, right? That's what stocks do. They go up, they consolidate, then they go up again. Like, that's very normal. So those are the things that that we're looking for. Here's you know, you want to look at this is on the IPO index. Let me just show you. Let me just back up a little bit. I'm getting a little ahead of myself. I want to show you the IPO index. So here's your IPO index, and these are making all-time highs, by the way. Right? So when I see the IPO index making all-time highs, I want to see what's in it. What's in the IPO index? Zoom, PDD, which I'm about to show you, which came out on our under the hood radar, which also looks good. And then we want to look at Roku, right? So Roku was on our under the hood report on August the 7th. So this was our August the 7th report. Here we go. So this is August the 7th. This is what Roku looked like when it came on our radar. And the bet was to buy it as it broke out above 160, right? You can even be more conservative with 169, right? But at the end of the day, this is a massive base within an ongoing uptrend. It's coming out on our radar, right? This is the under the hood. This is what the under the hood report looked like on do I have it here? This is on August the 7th. This is what the under the hood watch list looked like. And then Roku was just one of the juiciest names. So as you can see, these were all the names that came on our radar at the time. And here we are 30 points later. So, you know, we look up, we build the lists, and then we overlay our analysis and come up with sometimes a handful of names, or as Straza put it this week, JC, there's just so many good names to buy. I don't know. So this week, I don't know if you caught this, Jeremy, we came up with the under the hood on the weekend like we always do, and then came out with an under the hood special report.
I did see that,
because
yeah.
I had the boys just bitching at me. They're like, how do we not mention it? We owe it to the people. I'm like, fine, create another report.
I did see that. I was wondering what that was. But yeah, I mean, it's incredible. Again, I know that some of you have been with us every single week. If you have, let us know, and you can let everybody who's new for the first time. JC has been calling this. Like we literally took 2 weeks off because my son broke his leg and he was traveling. But like we've been calling this week over week over week, and he laughed. I really need to get my team on editing these webinars, man, because you were laughing out loud when everybody was freaking out because the market was tanking. And you know, you're like, this is, what are you guys talking about? This is sector rotation. What are you afraid of? You know, and we had this little talk about it. So I know for some of you, you're like, okay, why are you guys, you know, making points to talk about this $15 billion client? Why you're doing this? This is because this is an ongoing story, and we like to try to make it as engaging as possible. A, B, we're also trying to make this as memorable as possible and real as possible. We incorporate our real lives into everything that we're talking about here. Just like these ideas that we're discussing are real. So anyway, good stuff. You want to look at Abbott Labs. That was someone wanted to look at that as well. That's Thomas. He wanted to look at Abbott Labs. And we got a couple other recommendations I wanted to get to before we call it a day. So if you've got some, we're going to try to get to as many as we can. Put them in here as much as you put your ticker symbol into the chat and we'll get into it. So we'll go to Abbott. Thanks, Thomas, for your question. LVGO is next after Abbott.
So Abbott's been, just to show you, like when we really started looking at Abbott Labs, this was really the look. This is really what we're looking for in Abbott Labs. This chart goes back to, the summer. And this is what we were looking at, this 91 level. And the trade was to be long if we're above 91. And we consolidated, and right around July, we broke out and absolutely ripped up to 115. We've pulled back down to about 100. And now I think we're ready to rock and roll again. I still think it goes to 138, 140. I mean, at this point, we're right around 110, right around where this arrow is where we are, about halfway to our target. That's what I think about that.
That's what you think about that. How precise?
About that.
That's so, again, Mike, thanks again. We love the engagement. Ask your questions. So Mike, hopefully this is specific enough with the specific companies. LVGO.
By the way, this came up, hold on. So this is a medical device stock, Abbott Labs. So this is where that top-down approach helps out. So Abbott Labs is popping up on our under the hood radar. And then it's also the second largest component of the medical device index, which is making all-time highs. So this is where we combine that bottoms-up universe of extra attention being paid to a name like Abbott Labs in this particular example. And then it also happens to be in an industry group that we like, in an asset class that we like, in a country that we like, right? You see?
Yep.
Showing positive momentum, showing relative strength, right?
Yep.
I don't know the first thing what the hell Abbott Labs does. I have no idea. There may or not even be laboratories involved. I don't even know. That might just be like the name, you know?
Yep.
I have no idea. It's a medical, it's the second largest component of the medical equipment index. That's all I know. Right behind Medtronic. That doesn't look as strong. For the record.
It allows us, this is the best part about the data and how we're looking at the data, right? LeBron doesn't care what kind of shoes the person's wearing when he throws in the ball. People get so hung up on the stupidest stuff, man, when they're looking at things. When he throws passes. Okay, go ahead.
You want to see something dope, Jay?
I love seeing stuff dope.
Commercial hedgers in the United States dollar are actually net long. Commercial hedgers are never net long US dollar index. So they really, really like the dollar. Meanwhile, they're net short almost 240,000 contracts of euro. This, check my math, commitment of traders, junkies. I'm pretty sure this is the largest net short position in euro ever. Again, probably not because they think euro goes up, right? Extreme short positions in Japanese yen, 43,000 contracts. And then I don't have copper here, but copper, they have their largest net short position in copper ever. So to me, the positioning currently in the institutional world, based on the futures commitment of traders report, suggests that there's some unwind necessary in this reflation trade. The fact that they're this aggressively, I mean, they're literally long dollars. They're never long dollars. It's more of a matter of how short are they, right? That's how commercial hedgers work. And they're actually net long. That's crazy. And I should say crazy. It's just what it is. But I think it's something worth paying attention to. And I find it really hard for the dollar to go lower here. So just think about what benefits from a weaker dollar and just think about that not benefiting.
That was elegant. That was really elegant. Wow, great.
I thought that's something interesting that's been coming up in conversations. Is the commitment of traders report is pretty it's pretty out of control right now.
Wow. So okay, so they think that the dollar is going to go up, and great.
They're betting very aggressively that that's what's going to happen.
Huh. All right. Well, everybody, thank you so much for coming here tonight. Inside here, I put the link to what we had discussed tonight with some absolutely mega trades that are all found under the hood for just $79 a month. This is the, I think, best deal ever in our space, in the trading and investing space. If you want amazing education and if you want absolute world-class insights, JC is hired by almost every single major institution in the world to for his guidance, his gift to analyze data, lots of it, and come up with these types of trades. So, JC, we always do this every single show. How would you, any parting words for us tonight?
I got some parting words for you. I have more of a parting video. Are you able to see this, Jay?
Yeah.
Have you seen this chair?
No.
Look at this chair. It's the Scorpion chair.
Oh my God, that looks amazing.
Come on.
Look at this. That's kind of ridiculous, actually,
Dude,
now that I'm watching.
Is so sick. Like, how am I expected to analyze data without this?
That's so sick.
Dude, come on. Come on.
If you buy one, I'll buy one, dude.
It comes with a heating function. So in case you want a heater. It's $3,300. It's not that much. I thought it was going to be more.
Yeah, look at that thing. Wow.
Dude, this thing is badass, huh?
Wow. I'm glad that you're married, dude, because if you would have bought that before when you were single, you would have been single for a long time, dude.
Imagine this thing shows up on Amazon. My wife's going to kill me. Are you kidding me, dude? If I show, she's like, what are you going to do with that thing?
Oh, that is so good, man. Love it, man. Good stuff, dude. Parting words was a video. Everybody, we are going to be moving these to once a month. So we are not going to be doing these every single week. We feel like we can add more value by putting the best stuff that we've got to share. So look out for the next invite. JC, you're a gentleman and a scholar. Thank you so much for your time tonight. Great seeing you, my friends. I'll see you online.
Birthdays was the worst days. Now we ship champagne when we thirsty.
Salud, my friend. My best to your family, dude. Take care of it.
Brother.
All right, bye.